Good morning, everybody. Welcome back, everybody here in situ at the Education Community Unit Grangemouth, and also a warm welcome to our members and speakers online. Also, a warm welcome to our visitors from ISIO. Today, the 22nd of June, for a meeting with the Pension Committee and Board. Please note this committee will be live streamed. People are watching online, and the public can also find the proceedings later at the Falkirk Council Committee's YouTube. There are 12 items on the agenda today, and I also understand the weather will be very warm. However, at this moment, I expect the business to carry on to agenda 5, and then we're going to skip then to item 12. So if anybody needs a break or a cool drink in the interim, please raise your hand, and then we can have a planned break. I'm now going to move to full business now. I'm going to start the business. Do we have any apologies, Mr. Peary?
Thank you. Yes, we've got one apology from, just check my notes, excuse me, Helen Welsh from Unite. Thank you.
Thank you.
Thanks.
Now move to item 2 on the agenda, declarations of interest. Members should declare any financial and non-financial interest they have in any item of the business at this meeting, identifying the relevant agenda item and the nature of the interest. I don't see any hands up. Oh, sorry, Councillor Spears.
Question I asked at the briefing. I'm a former captain in the army, and I'm also a former employee BP. So on agenda item, sorry, I'm looking for the PE 51. No. 2 seconds. Well, it's the last one. So it's a non-pecuniary interest. I'm retired from both, so but I think I should make it clear to start.
I'll take advice on that, Councillor Spears.
Just to say, so we don't have non-pecuniary interest anymore. So I've got financial or non-financial, but there is a carve out in the Code of Conduct for people who have had pensions, so you don't need to declare anything. You can make a transparency statement if you wish to state those facts, and it will be recorded, but you'd still, if you judge so, you can take part in the meeting. If you were to make a financial declaration, then you wouldn't be able to take part, but you're okay to take part in the meeting. Get your light on, son.
Shareholder in these businesses, but I do have a BP pension.
Okay, thank you.
Thank you, Councillor.
I'm taking advice from yourself on that.
Thank you for that. We'll now move on to item 3. That's the minutes of the last Pensions Committee and Board, and that was held on the 18th of November 2025. I expect everybody's maybe had a wee read already, and I don't see, have we got any matters arising from this minute? I don't see any hands up or anybody in the room raising an issue. So I'm just going to move on. So we agree the minutes then?
Agreed.
Right, thank you. We're going to move on to rolling action log. That's pages 13 and 14.
Thanks, Convener. That's simply to say that identify that a report was asked for on the review of investment principles, to say the report was expected at today's meeting, and indeed the report is on today's agenda, as mentioned earlier with Councillor Spears. It's item 12.
Thank you, Mr. Peary. We're now going to move to, sorry, Councillor Spears.
Yeah, it's just regarding to recognise the costs, the 100k and the 140k If that could get a wee bit further explanation how it costs that much.
We can discuss that later, actually, when we're discussing the item, if that's okay, because we'll go into that then in great detail. Okay, but thank you, Councillor Spears. We're now going to move on to the more substance of the business, and we're going to have a report by Catherine regarding rotation of the chair of the Pension Board.
The role of the Pension Board is to provide an oversight function and to assist the Council in its role of scheme manager by securing compliance with the rules relating to scheme governance and administration, securing compliance with requirements imposed by the pensions regulator, and any other matters that may be specified in legislation. The board is made up of an equal number of employer and member representatives, and our board consists of 4 employer representatives and 4 member representatives. The member representative positions are filled by the trades unions, and the employer representatives are filled by the employers participating in the fund. These include representatives from small and large employers. The chair of the board also provides a statement for the fund's annual report and accounts, which covers the work that has been undertaken by the board over the scheme year to ensure the efficient and effective governance and administration of the fund. The chair of the board also meets with senior officers twice a year, along with the chair designate, to review the fund's risk register and risk arrangements. Under the board constitution, the employer and member representatives each appoint a chair, and the chair rotates annually between the employer and member representatives. During the past year, the chair was Tony Kaleri, a member representative, and the chair now passes to Ross McKenzie, who is an employer representative. Any questions?
Do you have any questions on that? No, I would just like to thank Mr. Kaleri for being the chair of the board, and welcome also today Mr. Ross McKenzie, who will be the chair from the Pension Board from June 2026 to May next year 2027. So I don't see any questions in the room. They're actually online. So I'm just going to move to the recommendations. It's, as I said, but it's more formal. Note that the chair of the Pension Board passes from member representatives to the employer representatives. And also note that Mr. Ross McKenzie will be the chair from the Pension Board from June 2026 to May 27. Thank you. We're now going to move on to agenda item 6, and sorry, I beg your pardon, we're not going to go to agenda item 6. I'm going ahead too far. We're now going to move to agenda item 12, and that's the implications of exclusion and divestment, and that will be taken by Debbie and Amanda. Thank you.
Thank you, Convener. Firstly, I hope that those who attended the committee and board briefing on Friday found it helpful. I will make a short summary introduction to the paper and then ask ISEO, who are here today, to summarise their work before I return to summarise the officer position and then open up for questions and discussion. The paper outlines the process and analysis undertaken over the last 18 months, including the private paper and training in September, and the work instructed following that meeting. Following that work, specialist advice from ISEO and Pinsent Masons was again procured, and the work focused on the fund's public equity mandates. As you can see from the paper and appendices, a vast amount of research and analysis has been undertaken. As noted at the training, the papers have been anonymised to enable these papers to be presented publicly. As outlined on Friday and in the September last year training, the committee has a fiduciary duty to the pension fund members, and when setting investment policies, the committee must act in a fiduciary capacity and put aside its own personal interests and views, including ethical views. The committee must also be cautious in setting investment policies in relation to highly contested issues and should evaluate any such policies under the framework applicable to financially material, environmental, social and governance, i.e. ESG factors, in pursuit of an investment purpose that focuses on non-financial factors. Committee must also have regard to professional advice when taking decisions. I will now hand over to ISEO to outline their work and recommendations.
Okay, good morning, everyone. So we'll provide a very brief overview of your work. As Debbie mentioned, there's a huge amount of backing and work that's gone into this this research. We've got myself and Bea from ISEO here. I'll provide an overview of what that work consisted of, and then we'll draw out the key recommendations, then happy to take any questions after that. So when we were last here in September 2025, we discussed the stage 1 of this work, and that was more of an exploration into what was possible in terms of the realms of investments and fossil fuels and controversial weapons. At that point, one of the decisions made was to step forward into stage 2, and we've been working on that project since then, and we're back here today to present the findings. The way we split stage 2 is into 4 key parts. So paper 1 was to refine the definitions and analytical scope that was discussed as part of stage 1. Paper 2 was to look at the portfolio exposure review, so look at the Falkirk Fund's investments and where the exposures were to the various sectors and companies in question. Then paper 3 was to look at the potential pathways forward. So what were the options to the fund and what were the implications, both financially, from a cost point of view, from an investment return point of view, but also fiduciary duty standpoint point of view. And then paper 4 summarised the key conclusions from those first 3 papers and set out a number of recommendations. And so that's taken a series of months. We've been engaging with the officers along the way, and we delivered the final set of those 4 papers earlier this month. So I'll pass to Bea to talk through the papers 1 and 2 of those, then I'll pick up on papers 3 and 4.
Thank you, Andrew. By way of reminder, we started off the work on the back of the wording in your motion passed at the end of last year in relation to 2 specific sectors, defence and fossil fuels. By way of reminder again, on the defence side, the wording was aligned to controversial and or offensive only weapons, whilst on the fossil fuel side, it referred to oil and gas laggards. So on the back of this, we engaged with your public equity managers, trying to understand to what extent they could actually align or assess the exposures that you guys have across these 2 sectors. There were, as you can probably imagine, some difficulties because the kind of jargon and the taxonomy within the industry and finance world is a bit different from the wording that was put forward in the motion because of 2 primary reasons related to data gaps, number 1, and number 2, in relation to inconsistency across managers and different investment frameworks. On the back of this, we have put forward a new set of proposed definitions to work off and understand the types of exposures that the fund has. And we took a 2-pronged approach across worst offenders and laggards across both the defence side and the fossil fuel side. So on the defence side, we split on the worst offenders as kind of the lower hanging fruit as purely controversial weapons. This was the easier alignment for the definition because it does have some level of consistency and standardization across different international treaties, and usually it refers to things like biological weapons and chemical weapons. On the laggard side, this was a bit more complex. We appreciate that the investment industry usually kind of groups together the aerospace and the defense sector, which can make the kind of entire assessment of the industry as such a bit more complicated because you can have commercial airlines sitting across defense companies. As such, we propose to adopt the MSCI GICS classification, which does group everything together, however, also delivers the MSCI ESG ratings, which enable to understand to what extent holdings within the sector are actually upholding certain specific KPIs in terms of environmental, social, and governance respects. On the back of this, we put forward a proposal to review as a laggard within the sector companies that would fall within a BB rating of the MSCI ESG. ratings. On the fossil fuel side, again, we put forward a similar two-pronged approach with kind of worst offenders and laggards, where on the fossil fuel side, for the worst offenders, we were aligned, taking a step back, not just in the oil and gas, but looking at more broadly for the fossil fuel sector. So specifically looking at coal and the oil sands, holdings that generate more than 20% of their revenues from these two sectors specifically, as these are deemed to be kind of worst offenders in terms of the amount of carbon that they produce when they're burnt. On the laggard side for fossil fuels, this was instead kind of being put forward leveraging the Climate Action 100 benchmark. Specifically, we leveraged 3 specific indicators looking at Paris alignment, specific KPIs and progress against decarbonization, and also CapEx and spending towards new upstream oil and gas exploration. On the back of these proposed working definitions, which we've reviewed with the officers, we went ahead and did an analysis of the exposures across the fund. And the key numbers that emerged were the fact that on the defense side, there's about a 10.5 million exposure to the controversial weapons, no exposure to laggards, and around 54 million exposure to the broader aerospace and defense sector. On the fossil fuel side, there was no exposure to the worst offenders, so no exposure to coal and oil sands, around 79.5 million exposure to laggards, and then the broader fossil fuel sector around 141.8 million.
Okay, thank you. So that was papers 1 and 2. Paper three, as I mentioned earlier, looked at the future options. So building on the scoping out of the definition, looking at what the exposures were under that definition, and in paper 3 we set out 4 potential options for the fund to take forward. I'll touch briefly on each, and then comes to the conclusions that we got to. So option 1 was increased engagement and stewardship in a more bespoke manner. So essentially no changes to the investment portfolio at all, but look to build on some of the good work the fund and the officers have been doing already in terms of the engagement through Hermes and direct engagement with managers, but do that in a more targeted way. Option 2 looked to address the worst offenders that Bay has just mentioned in the portfolio, and what that meant in practice was to the worst offenders appeared in the passive equity investments for the fund. So of the order of 10.5 million and of around 0.5% of the total equity exposure. So when I'm saying to deal with the worst offenders, it's essentially looking to reinvest the passive equity investments into a different mandate that looks to screen out those worst offenders. Option 3 looks to go a step further and deal with worst offenders and laggards under the definitions we proposed. And they're present in a wider range of mandates. So four mandates altogether, a total exposure of around 90 million or 3% of equities. So a large amount of structural change that will be needed there, and that comes with an increased level of cost and a disruption across the portfolio. Option 4 goes a step further than that and looks for total disinvestment from the 2 broad sectors we mentioned, so fossil fuels and aerospace and defence. And again, it can be thought of as a similar action to option 3, but to a higher degree, so excluding the full sector exposure there. And the amount of investments that would be targeted under that approach is around 200 million of the equity portfolio, or around 10% of the equity portfolio in total. And again, the level of disruption and costs are higher under that option 4. I won't talk specifically about the costs as they're outlined in the cover report, but I will say that they increase as you go across those 4 options 1 to 4. Then if we turn to our final report, so paper 4, what that did was summarise the information that we'd worked on in papers 1 to 3, and then look at the fund's specific situation and put a recommendation forward. And essentially what we said was option 2 seemed like the best approach to take forward, given it dealt with the worst offending companies. The level of disruption was minimal within the portfolio, so there was some rejigging of the portfolio required, but not a huge amount in order to deal with that 10.5 million I mentioned. And then the question of fiduciary duty, our view is that wouldn't disrupt or compromise the fiduciary duty of the portfolio, whereas going further under options 3 and 4, there's a question mark around whether that would be okay under the fiduciary duty point. The final point I make, which I'm sure we'll talk about in discussions, is that option 1, so that more targeted engagement, can be used in collaboration with with options 2 and 3. So our recommendation put forward that engagement continues under a more targeted approach alongside option 2. So option 1 and 2 together, essentially. Further engagement wouldn't be required under option 4 because the fund would have fully disinvested at that point from the sectors. And that's it. I'll pause there. Happy to take any questions as they arise.
Sorry, Debbie's going to speak now.
Thank you, Andrew and Bea, very much, and we'll probably take some questions at the end after I've finished through the final bit of my comments. And before I move on to outlining the officer's view, I'd firstly like to once again reflect back to the fiduciary duty and what we asked Pinsent Masons to do as part of this stage 2 work. Pinsent Mason reviewed the ISIO papers from a legal perspective and concluded that the papers provide the pension committee with sufficient information to carry out its decision-making process in a manner which would be consistent with its fiduciary duty. So I'll move on to summarise the officers' views following the stage 2 work that has been done. Fund officers overall remain of the general view that, as outlined in previous papers, that the engagement approach remains the most effective method of persuading companies to change by using our shareholder voice. For example, voting and working collectively with a voting and engagement specialist and with other funds. This approach was also highlighted as being the primary approach used by peers in stage 1 of the process that we've been through. Fund officers are mindful of the fiduciary duty training undertaken in September 25 and the need for this to be taken into account as part of any decision. In line with this, the ISIO report draws out fiduciary duty when examining options, and Pinsent Masons have reviewed the papers as mentioned earlier. Officers have recommended option 2, acknowledging that having a mandate that has a small indirect exposure to controversial weapons could be seen to be at odds with the responsible investment approach outlined in the Statement of Responsible Investment Principles, the SRIP. As such, the officers would support the changing of that mandate to another which removes this exposure and is similarly low cost and passive, screening controversial weapons out. Fund officers, however, note that ISIO estimate there are significant transaction costs in transitioning from this mandate to another. However, the ISIO work sets out a clear rationale for this approach, and ISIO are of the view that this approach would not breach the fund's fiduciary duty. ISIO have identified possible alternative vehicles, but a selection process would need to be undertaken. Officers also draw attention to the focus there has been to reduce investment fees in section 4.34 of the report, the likely estimated cost of ISIO's proposed options as outlined in section 4.25 of the report, and also highlight the reports that the costs that haven't been costed, for example, the in-house fund resource, some extra manager fees, and governance of an extended engagement work through option 1. With regard to the other ISIO options 3 and 4, fund officers are cognizant of the very low level of exposure, complexity and cost that removing laggards would incur, and would therefore agree with ISIO that these options are not recommended. As outlined by ISIO, these approaches limit diversification and future investment opportunities, as well as resulting in significant increased costs. The work by ISIO flags that such an approach, particularly a broad sector exclusion, would be more likely to risk the fund breaching its fiduciary duty. Officers do not recommend adopting approach 1 at this time. Officers are concerned that this extra stewardship may have little impact or meaningful change in company or produce meaningful change in company behaviour. The biggest impact or clout comes from large funds, groups of investors campaigning against companies, as illustrated recently with votes against the BP chair. The fund participated in a shareholder co-filing with other investors, and the resulting vote made news headlines. Companies are unlikely to sit down with the fund or even the voting and engagement provider where they're only representing one small fund with a pretty small shareholding. The The likely cost of the suggested bespoke service would represent a substantial increase to the current voting and engagement fee that the fund currently pays, and we anticipate there would be little cost benefit to this additional spend. This approach would also impose a higher governance burden on the fund, which hasn't been costed, and would require more specialist resource within the team. Due to our size, recruiting such specialist resource may be challenging. And we have moved a long way already with having an engagement provider, which has only been in the last 6 to 7 years. Instead, officers suggest that we work with our collaborative partners to continue the development of the fund's approach to laggards. The definition of laggards is not consistent, and our collaborative funds, Lothian Pension Fund, are reviewing their climate policy, including their approach to laggards. Given the collaborative relationship and the significant fund investment in Lothian LPFI mandates, officers recommend that the approach to laggards is reconsidered once the Lothian work has been completed. If appropriate, the revised climate change policy could be included in the fund SHRIP and will come to committee for approval during 2027. Officers are also mindful that, as noted in section 4.47, that there is an option for no action or change should the committee wish to consider that. Finally, as highlighted in the financial and resources section of the report, the costs associated with the product so far are not insignificant, and depending on the option chosen, there would be other significant costs on a one-off and recurring basis. In addition, a great deal of fund officer, including Chief Finance Officer time, has been spent on this work, with extra hours being spent and other work being delayed. That's the summary of my report, and just see if Amanda's got anything to add.
Thank you. I'll just add a couple of points. So as we've outlined, this is the extension of the work that we did in September. We presented to committee in September 2025. Councillor Spears, you had asked for more information about costs. So we had flagged in the September report that stage 1, which is what was reported in September, had cost around £43,000. We had, there was then a motion for additional work to be done, and as part of that motion it was agreed by committee that the cost would be around £100,000 to £140,000. So that was our best estimate of what we thought it would cost to both have our investment consultants work on it, but also to get the legal advice that we needed to take. So as at this point, around for stage 2, we're estimating that we spent around £100,000. So in total, £143,000 has been spent on the 2 stages of work. So if I just go back to the main points that Debbie's made, and I don't want to go through and repeat them all. I think we had the training on Friday, which was really helpful, and thank you to everyone for attending and for asking a lot of questions. I think one of the things that we flagged up at that point is that whilst there's reference to the costs associated with this, one of the big issues that we're concerned about, I'm certainly concerned about, is about that the reduction of diversification and the concentration risk. And I know Andrew and Izio had explained that a little bit more at the training. Debbie has touched on the point around resources, and I would just want to emphasise that point. I would want to thank Debbie for all the work that she's done on this, but it has been a huge piece of work and a huge undertaking for a very small part of the team. Our accounting and investments team is only 2 people, Debbie and Justina. Sorry, we also have Jodie, but Debbie and Justina have been involved in this piece of work. And they've worked incredibly hard on it, and it's taken up a huge amount of resource, and that resource has come at the expense of other pieces of work that we would like to do. So I would really just like to emphasise that point, that as a small fund we are struggling to resource this level of detailed work. I would like to take the opportunity to thank everyone involved, both internally and also the support we've had from Izio and the support we've had from Pinsent Masons. And I hope that the committee will feel that we've done a sort of thorough, well-researched, in-depth piece of work to bring back as requested in September. Thanks.
Thank you, Amanda. And I too want to thank Israel for presenting this report. It's very comprehensive, a lot of detail, and it's a high level of competence. And as it's up to the committee here today, based on the options available and the information, to make a further decision. But at this moment in time, what I'm going to do, I'm going to open it up for questions. If anybody's got any questions. Councillor Spears.
Thank you. I would also like to thank everyone involved for the high level of work and input that's been brought into it, which for some might be a difficult subject. We need to address, firstly, the definitions of what's been stated. We're talking about defensive weapons, and the weapons you're talking about are way outdated, and they breach the Geneva Convention, and I don't think any country admits to making them at the moment. So where was the evidence base that these actually exist? First question.
This was based on the internal frameworks that the managers that you have are using. So this is based on their own internal assessment of what stands as controversial versus conventional.
We have seen in other countries, that take Iran for example, in Halabja, where Saddam Hussein used sarin gas on his own people. It's very difficult for local elected members to make defensive, high decisions. This is really for a government decision, and I would believe our government sticks with the Geneva Convention. So there's uncertainty, and that's me being polite, regarding weapons. Nobody knows what weapons are held by what country, right? You may have various conventions and agreements, and as we see in the Middle East at the moment, agreements can change every day. We can see in our own country, as I left the news this morning, I don't know if our Prime Minister's resigned or he's not. He has resigned. So we are Prime Ministerless in our country just now. A Prime Minister that said he would want to spend up to 5-6% of GDP on defence, would it be advisable for us not to be part of that, investing in our country, investing in the defence of our country, and at the same time providing funds for the members of our trade union, our pension fund? When it comes to fossil fuels, I'm the representative for Grangemouth. To say we've had a bad couple of years is an understatement. But the war in the Middle East is also proved.
Thank you, Councillor Spears. If you got any questions at all?
Yeah, I want to leading on to the question on the oil and gas
questions
industry.
At this moment in time. Thank you.
Fossil fuels. I believe the coal industry, there's very little coal used now. But the oil and gas industry is not just there for fuel for cars and power stations, pharmaceuticals, plastics, hundreds of other things that are vital. And don't forget, it's oil industry products that make photo cells and different stuff, you know, solar panels. So we can't just forget that industry. We need it. And if that industry is going to be growing, I'd rather be part of somebody that was helping and financing and being in there and, yeah, making a profit for our members. But that industry is not going to disappear.
Councillor Spears, we'll have a lot of questions today. Do you have a question? I don't mean to be rude, but if you could ask your question.
I might come back in.
Yes, that would be great. Thank you. Next, who wishes to ask a question is Mr. Andy Whitty. Thank you.
Hi, good morning. Thank you. And also thanks to the officers at Falkirk and their advisors for all the work on this. You touched on, I'll come back in later on about my views on the recommendation, but my question is around option 1 and the stewardship. And you did start touching on why you didn't think that should be done. I suppose my question was around, is this a one-off decision if we follow the recommendations or not? You talked about the work reviewing climate change and the work jointly with the Lothian Pension Fund. Could you just touch a bit more on that? What's the timescales around that? And when are we likely to maybe be discussing it again then in collaboration with any review that Lothian have done? Thanks.
Thank you, Mr. Whitty. I think the recommendations from the officers is to continue looking at the laggards approach. We're not discounting that, so that is the recommendation, to continue looking at it, not necessarily following option 1 and using the voting and engagement provider to do specialist one-off pieces of work, but maybe at this stage, maybe that might come in the future. But because Lothian Pension Fund have got a climate policy and are looking to review it and looking at their approach in laggards and a way of looking at it, which Izio looked at, the Transition Pathway Initiative, is to maybe try and keep as aligned as possible is what we're suggesting as officers, rather than going and doing something different, which then involves more resource to monitor and look at. Now, the statement of responsible investment principles would generally be reviewed as part of the triennial evaluation, which obviously is about to kick off over the next few months and reporting back in February, March 27. I guess it kind of depends how Lothian get on with their policy, but the intention would be to do something along those lines if that was available, to try and bring something back then as part of that review.
Does that answer your question, Mr. Whitty?
Yes, it does. Thank you.
Amanda would like to answer too.
Sorry, Andy, I suppose I just wanted to come in on the option 1 that you referenced in terms of engagement. And what I would say is that it's not that the fund isn't keen to develop and improve its approach to engagement. And I think what we are concerned about is just the limited impact we may have as one small voice in a sea of a lot of voices and a lot larger voices. And so that's why to date we've felt that the most effective approach is in collaboration, pulling our resources and our voices to have more impact. And we have seen some benefits from doing that, and I think Debbie touched on that a little bit. What I would also say is that in the budget, we did agree to expand the accounting and investment team, and we are working on that, and we're looking at recruitment. And once we sort of have a bit of stability in there and we have the team up to full speed, certainly areas like engagement are the type of areas where we would like to do more. So it's not that we are suggesting that things will always just stay as they are and we won't continue to develop this area. It's just that for that particular approach, we feel that there's maybe going to be limited impact for the costs that we would expect. Thanks.
Thank you, Amanda. Nicola McAlter, you've got a question. Thanks.
Hi, thanks. My question is around fiduciary duty. And obviously there's decisions that are made should be around the fiduciary duty and first and foremost financial implications for our members. And my question is that ISIO has said in their view, in their opinion, that it does not breach fiduciary duty. However, in 6.10 it says that legally it is unlikely to breach fiduciary duty. And I'm just a bit concerned around this decision, because also in 6.14 it said it can be challenged. So either it is in breach or it's not. And for me, it's quite a grey area. So my question is is it in breach or is it not? Because 6.10 says unlikely. So how does that sit for the committee when they're voting in the board? You know, it feels like it's quite a big risk.
Thank you. If I maybe start, and then you may want to come in. I think part of the challenge is in certain areas it is a bit of a grey area, and I think we heard some of that through the training in September, and I think we also heard in September that there's not been a lot of challenge to the sort of legal definitions around fiduciary duty in Scotland to really sort of test it out in court. So to some extent, we are really relying on the evidence that we get from Pinsent Masons who are looking at that on behalf and advising us. And as we know, we can't share all that information at this time. What I would say is just on page 42 of the supplementary agenda, there is some reference from ISIO about why option 2 would potentially be less likely to breach that fiduciary duty issue, and that's I'll maybe let Andrew or Beatrice come in to talk about that. But I think this element of it particularly is a bit of a grey area. So there is a degree of risk that we could be challenged. It's maybe just that risk is less likely than it would be if we went for full divestment. Thanks.
Yeah, so if I just add, I think the term unlikely is probably the right term to use. So if I take it back to those options that we set out, so option 1 is no change to the investment portfolio. So there's not really a question to be answered on fiduciary duty there. And the way I would think about fiduciary duty is the more we can't sit here, or no one could sit here and predict what the future returns of a set of investments are. But as you move through, so that's uncertain. What is certain is the cost that it takes to rejig and restructure the portfolio. With fiduciary duty, the more you exclude from an investment manager's universal remit, the more likely you are to diverge from a particular benchmark or performance. A better way to think about it is performance may be different, good or bad. But equally, back to Amanda's point that she made earlier, the setup of the portfolio can change as well. So increased concentration in certain areas, less diversification. So the more you exclude as you go across those options 2, 3, and 4, the more chance that you will diverge from a certain benchmark and have a higher investment risk profile. And I think that's the area where you can get challenged from a fiduciary duty point of view. So our view was, because there's an amount, but a relatively small amount under option 2 that's being excluded, you wouldn't expect performance to diverge too much. So I think that's likely to be defendable under fiduciary duty point of view. As you move to options 3 and 4, it becomes more of a grey area, as Amanda says, because you're excluding more, and that's going to have a higher impact on the portfolio.
Thank you. Thank you for that. We're now going to move on to Councillor Hannah. Your question. Thank you.
I think Rob was in before me, to be fair.
You go ahead.
Okay. Right. I totally accept that in the world of investment, nothing's certain, and there is nothing definite in terms of any investment. As every advert on the telly will tell you, investments can go up and can go down, and a wide number of things impact on that. I also accept that this committee is not in a situation where we can dictate individual investments in individual companies. That is absolutely clear. I'm also clear that we have a fiduciary duty and that we must do our best, make our best decisions to follow that. The first part of my question, I've got a number of bits that I want to ask about. The first bit is about the resources. You've made reference to the resources required to do certain things and the inadequacy of the resource that we have. I wonder if you could say a little more about the size of the resource and whether we need to be considering putting in greater resources.
Thank you. I suppose what I would say is I don't believe we have an inadequacy of resource for the work that we have to do beyond that which we've already recognised in the budget and that we're already trying to actively recruit to. However, I think what can't be underestimated is the significant time that these projects take. So this isn't what I suppose what I would say most pension funds in Scotland are not spending the level of time and detail reviewing this kind of area. So it feels quite exceptional to me. And I suppose what I'm trying to say is that exceptional work is reducing the amount of capacity and resource that we have for the day-to-day investment management and accounting activity that we would like to be focused on. I think the other point I would make is that for a fund our size to be able to attract, for example, an engagement specialist to work is highly unlikely in this capacity, in this sort of size of our fund, and within the public sector, and that's why we try to be really sort of effective in the way that we target our resources by doing these shared exercises and by working with, for example, LAPFF or Climate Action or Follow This or any number of groups that we work with. We think that's the most effective way. So I suppose it's about the exceptional nature of this piece of work. This is not the day-to-day work of the pension fund. And I think the more that we try and do this type of activity, bearing in mind that we've been doing this now for around 18 months, it's just really important to recognise the impact. And then I suppose the other thing I would just flag, Debbie mentioned it already, we are coming into that triennial valuation year. That's one of the biggest exercises that any pension fund goes through. So for the next sort of 9 months until we report that back to committee, we have a really full workload. So I'll just leave it there. Thanks.
Okay, thank you. The second part of my question is possibly for Izio, but I'll leave you to decide. I wonder if you could say a little more about what we mean by worst offenders and controversial weapons, because that is key to this recommendation. And there's been reference to the Geneva Convention, and surely we're not investing in things that break the Geneva Convention. So I think it would be useful if you could clarify what we mean by the worst offenders and the controversial weapons.
In the appendix of the report, there should be kind of a list of the treaties that are usually kind of covered under such definition. Again, as mentioned before, usually we will be talking about things like anti-personnel landmines and chemical weapons, biological weapons. There are certain kind of question marks around things like nuclear weapons, and there are geographical inconsistencies, let's say, across US managers and European managers. But usually your managers, because they're all kind of majority European exposure, they all share kind of a similar framework internally in terms of what they see, and that's aligned with the treaties that are included in the back of this report.
So we're talking international treaties?
Yes, yeah.
Which define these controversial weapons. And
Correct.
All we're saying in this recommendation is that we should divest from investing in
holdings that
things that are
contribute
defined
towards this.
internationally.
Yeah.
Okay. Thank you. The third question, I think, probably is for our officers. It's in relation to the work that's being done by Lothian Pension Fund on laggards. So you've said quite clearly that we're not saying we're not going down that road, but you are saying we want we want to allow that work to go ahead before we make a decision. You say a little more about both what is being done and the timescales.
Yeah, I'll maybe start, and then Debbie might want to add anything that I missed. So Lothian Pension Fund are looking at this policy. They already have a climate change policy that sits under their SRIP. So we have our Statement of Investment Principles, the SIP. We have our Statement of Responsible Investment Principles, the SRIP. And then they have a policy that sits under that, and that's their climate change policy. They are in the process of reviewing that policy. And given that a large number of our mandates do sit with Lothian, it would make sense for us to wait to see what the outcome of that is, and then to better understand how that could be applied for Falkirk Pension Fund. I think one of the challenges is trying to, as you have flagged, that definition of laggard is quite challenging. So the definition that LPF use, for example, is not the definition that Climate Action 100 use. So getting a definition that we can apply consistently is where the challenge could come. So Lothian are in the midst of looking at that. We think it makes more sense for us to see what the outcome of that is. And then my understanding is that when Lothian take their SIP and their SRIP to committee, which is usually around March, I think, that updated policy would sit underneath that. And we will also be bringing our SIP and our SRIP to committee. And at that time, we may or may not be saying we would recommend adopting this policy as well, or here's the implications of this policy. So that will happen in any case, really, because we have to update our SIP and our SRIP for that time frame.
I think Debbie wants to add to that.
Sorry, I was just going. I don't have a huge amount to add, because obviously at the end of the day, Lothian will be looking at this climate policy with their committee. So what changes they're suggesting, etc., will be coming out over in the next wee while. So it's just a case of us looking to align with that, and therefore try and take out the kind of reinventing the wheel if we can, when they already manage quite a lot of our money. So they will be looking at over the last wee while, and it was just a case of us saying we would probably prefer to look at seeing how that pans out before making a decision to do something different.
Okay, thank you. And the final question I have is about consultation. I mean, clearly there's no way we can consult with our membership on individual investment decisions, but it does seem to me that it would be not unreasonable for us to look at consultation with the pension fund members about broad principles, such as are contained in the Statement of Responsible Investment. We at the training on Friday, there was a lot said about the costs of such consultations, the complexity of such consultation. That doesn't necessarily make it a bad thing to do. So I wonder if officers could say a little more about what the options would be to give members an opportunity to feed in to that process in March that will be going through March next year.
Again, if I maybe start, and then Debbie may want to come in. So again, I think it would be highly unusual for a pension fund to consult on its Statement of Responsible Investment Principles. And there's a number of different reasons for that. So one is it is a complex area. The Pensions Committee and Board have had the benefit of hours of training, and there'll be more training in advance going through the evaluation work. And And even then, at times, we've struggled to understand some of the nuances because it is very difficult and because it is based in regulation and legislation. So there's not a free choice. You know, we know that, for example, with what we've done, what we've gone through, it is highly likely that a broad divestment would result in a breach of fiduciary duty and we could be legally challenged. So it's not a free choice for the members to make. I think for me, there's a couple of, so I think also the hardest part of doing that consultation would be designing what we were going to ask. And I think we would have to have some real clarity and understanding of what it is committee would want us to ask, because that's the crux of the issue. There's no point in asking things that we cannot deliver. The second thing I would say is that it's a hugely resource intensive exercise, because to collate the responses and turn them into something that we can bring back to committee is challenging. And doing that whilst we're doing the evaluation in time for the SRIP to come in March, I think would be impossible for us. That would potentially lead to us having to go to an external firm to do that kind of work. We have seen some pension funds do something similar down south. Again, significant cost, bearing in mind we've already spent 143,000 approximately. And what we have found and what has been reported back is that there tends to be a very low response rate, not a response rate that's significant enough to allow a decision to be made on the basis of member views. So again, I think, you know, for a whole number of reasons, I would be cautious on that approach. One is the complexity of designing the survey. One is the complexity of the ask for pension fund members who won't have had the benefit of all the training that the committee and board have had. And then the low response rate that we have seen in other places, and then the impact of that in terms of being unable to implement anything on the back of a low response rate, but still having cost the pension fund quite a lot of money and resources. So I think those are the concerns I would have with taking the approach. And as I said at the beginning, I think it would be highly unusual for a fund to consult on its SRIP, but I'll let it.
Thanks, Amanda. Just reflecting what Amanda said about the low response rate that other fund has had, and I suppose for committee to consider, if you did have such a low response rate, what would you then do with it? Do you take that as the majority and try and do something with it? Also for committee, if it comes back, it's still committee's decision as to what they're going to progress, what option they would look at. So that still comes back to the same options that are on the table, or could be the same options at the moment. But the main thing for me is to consult on the SRIP is a massive document. It would have to be very specific. So it would have to be quite clear what the ask is. And as Amanda said, on the basis of then members not having the context of that, how that would then be explained to them would also need to be considered very clearly to make sure you're getting people's understanding of what they're actually voting for.
I think the same could be said, though, of Falkirk Council. Falkirk Council's services are highly complex, highly detailed, some of them very difficult to understand. We nevertheless have a community engagement and consultation strategy. It is imperfect, fully accept that, but just because something is difficult is not necessarily a reason not to do it.
I would say that, in my view, this area is beyond the complexity of anything that I've seen us go out to council with in terms of engagement, which is very often about a single item, a single kind of strategy that relates to services that people will use on a regular basis. So it may be something to do with education, or it may be something to do with roads, and people will have a vested interest because they're regular users of that. This is quite different to that, I think, in many ways. And I think where we do go out with more complicated surveys, as we know, for budget consultation, for example, which is broader and much more difficult to sort of target, we get quite poor response rates to those surveys. So I do think that this is, in terms of depth, complexity, this is a step beyond. That's not to say it couldn't be done, but I think we would certainly have to engage an external provider, and the committee and board would have to agree to spend more resources to do that. And I also am not sure that we would be able to do that and deliver it in advance of March. So it may be for the following SHRIP, if that makes sense.
Okay, thank you. Thank you, convener.
Thank you, Councillor Hannah. Next question is Mr. Davis.
Thank you, Chair. No one knows what the future holds. I think an example of that is in 1935, the UK spent 3% of its GDP on defence. In 1940, it spent 40%. And that's been recognised in modern portfolio theory and efficient markets hypothesis, which actually was first introduced in 1953. Because we don't know what the future holds, the best returns come from the asset class, which is called beta, rather than doing stock selection, which is called alpha, trying to beat the market. The best way to get the best returns for pensioners is to buy the asset class and do as least as possible to that as possible. Once you start interfering in stock selection, which these proposals suggest, you're going to reduce returns, increase risk, reduce diversity. And all that will negatively impact pensioners' returns. And our prime duty is fiduciary responsibility to get the best returns for the pensioners from the securities that we invest in. Our duty is to look after pensioners, is not to change the world. That's for democratically elected politicians to do. And I think these proposals go above and beyond what our remit is.
Councillor Sinclair.
Thank you, Chair. Yeah, I've got a number of questions on, and I think some of the answers and some of the contributions have been interesting so far. I want to go back to definitions, and I don't think it's a question for our officers, but perhaps for ISEO, the representatives from ISEO, who I'm really pleased are here because they give us a lot of good information. There is a clear definition in the industry on controversial weapons, and that's highlighted within the report. The ask that in September in relation to weapons in defence sector was the difference between controversial and offensive only weapons. And I wonder if you could perhaps say a bit more about the differences and what the decision in front of us is today, and specifically on the controversial weapons part.
Absolutely. So as we outlined before, and as you're also suggesting, the offensive only part was not part of this assessment because it was not possible to actually assess this. There's not an industry-wide definition or a market-wide definition that actually abides by that. So no manager was able to give us any sort of kind of actual like numbers or any kind of engagement rationale on the basis of that. On the controversial point, again, these are kind of based on these international conventions and international treaties. Specifically, I found it's actually Appendix 1 around cluster munitions, landmines, which is the Ottawa Treaty, biological weapons and chemical weapons. And this is what across Europe, the European asset manager base, it's quite consistently seen as kind of accepted as controversial weapons. There's going to be some, again, like nuances across managers, like primarily from the US, but this is broadly accepted as the working definition, so that any kind of holding that is contributing towards this falls under these treaties and conventions, and there's going to be an accepted kind of shared knowledge of trying to limit production and stockpiling and proliferation of these weapons. On the other side, of course, what is considered more traditional defense, which is everything that doesn't fall under these kind of 4 categories, is seen as kind of the broader industry, which is what we capture under our laggards and water sector exposure. And again, this is unfortunately not super helpful in terms of the MSCI GICS classification, because it does group a lot of different holdings together. Does that answer the question?
Thank you. Yeah, that gives me, it kind of leads me nicely on to the next part. There is a clear industry definition of controversial only weapons. Obviously, we've heard that offensive only weapons, it's a bit woolly at the moment, but there's nothing to suggest that what's conventional or offensive only today may not be considered controversial tomorrow. As has been said on several occasions now, we don't know what the future holds. However, based on the fact that the report at page 31 of the supplementary agenda, table 4 sets out that there is a 0.5% of the entire fund exposure to controversial weapons. That's equivalent to £10.5 million. Is the position that the exposure the fund has to this is within that clearly defined international understanding of controversial weapons?
Correct.
Okay, so from that, given the fact that we've heard a significant amount about the Geneva Convention, but later treaties such as I think you mentioned the Ottawa Convention, or the Ottawa Treaty, sorry, there's also the Convention on Certain Controversial Weapons. Given that is the case, is it the position of ISEO, perhaps the fund, or this committee, should it be the position that this represents a risk to the fund financially, given that there may be regulatory or legislative penalties for investment in this direct fund and directly investing in controversial weapons?
So I think the exposure, so the 10.5 million exposure to controversial weapons is in part of the fund's passive equity exposure with one of the managers. And the reason, so I think that's important because the reason it's in there, it's not an active choice by the fund or one of the active equity managers to invest in these controversial names. They're part of the global equity index. So anyone who invests in that index, which is a lot of investors globally, will have exposure to those names. So I think that's an important point. I think one of the things we've discussed when we've been pulling together this work is in terms of the controversial weapons as the worst offenders in the weapons category, and then the worst offenders in the fossil fuels category. The future is unclear in terms of how they will perform, but you could make an argument to say you would expect those companies to underperform going forward. So if you have a company that is purely mining coal or kind of the worst fossil fuels, that has a high risk of becoming a stranded asset if the world was to move in the other direction. So it is very difficult to say yes or no, but I think the risk of those companies underperforming going forward is higher. But if you think of that in the context of a kind of passive equity index, they would get, if they underperformed and the other parts of the index outperformed, they'd become a lower and lower weight over time. So it would kind of filter out that way.
Okay, thank you for that. And again, I suppose for us it's about kind of horizon scanning at the moment. But the point is that the report sets out that there is an exposure now to this, and that represents a risk to the fund. So the suggestion on fiduciary duty, for example, is that represents a risk now in relation to fiduciary duty as well as potentially in the future. So the officer's recommendations, and perhaps this is now for officers to answer, the officer's recommendations that are within the report offer the committee the best pragmatic way forward, and that any other decision, for example, options 3 or 4, or potentially taking no action, represents a fiduciary duty breach. That's my question. Perhaps that's unfair to put that on officers, but my reading of the situation is that options 3 and 4 breach fiduciary duty, a potential option to take no action, given the fact that we know there is an exposure and a risk associated with even a passive investment in controversial weapons. That exposure represents a risk and therefore a potential breach of fiduciary duty.
So I suppose again, I'll maybe start, and then maybe Debbie may want to come in. I mean, I suppose the issue around fiduciary duty is about significant financial risk, and so you could argue how significant the risk is if we retained that exposure to controversial weapons, given how small it is. So I think that's one of those grey areas that we've kind of talked about. I do agree with the point that options 3 and 4 significantly increase that risk. I suppose the other thing I would just flag with option 2 is that to remove that sort of 10.5 as it currently stands £1 million investment, we do actually have to do quite a lot of transacting to get that out the system. So it's part of a much bigger sort of mandate, £451 million. So there is a significant cost, and that's set out. But I think the point that you make is right. When we as officers have looked at the options, we've tried to take a sort of pragmatic, reasonable view that this would be a sort of one-off set of transactions to take that controversial weapons exposure out of our portfolio, and we would look to move that to mandates that don't have that. So then we would have all of the worst offenders out of our portfolio, and we'd have all the risks associated with those worst offenders out of our portfolio, if that makes sense.
Yeah. Thank you.
I don't think there's really much for me to add, just to reflect the fact that because it is a small exposure, the knock-on effect for the fiduciary duty and the risk, it's difficult to know, because we also don't know which way it might go. It might go well or bad. They'll be part of a bigger companies as well. I guess the exposure, these companies won't only just be specifically investing in controversial weapons, they will have other products. So it's even difficult to know within that company what the dynamics are. But as Amanda said, that when we looked at it as the officers' approach, that was a way to do it, but aware that there's quite large costs because of the fact that those 2 mandates, we need to come right out of them to be able to achieve what we're trying to achieve.
Yeah, thank you. So ultimately it's about protection of the fund and the members' best interests. So any exposure to risk on even if it's a small exposure to something that potentially breaches an international treaty, is still an exposure and a risk, and it's a basic founding principle that we shouldn't be exposing the fund to that risk. Sorry, that's that. I mean, I suppose that's the last thing I'll say on it. Thank you.
Absolutely, it is definitely a risk, but the fund is exposed to a lot of risks over a lot of companies. We've had scenarios where there's mining companies where mines have collapsed in the past, and we've taken class action. So it's not that there's no risk in other things too. There's risk in all the investments we have, for various reasons. I'm not trying to belittle that. I'm just trying to put it in context.
Thank you. We've had quite a lot of questions there. We've got another question. Mr. Flynn, thank you.
Yeah, thank you, Chair. Thank you very much. I've got a few questions. My first one is that we've got the £10.5 million invested in the fund, and has already been suggested, well, we know anyway, any fund invests in lots of different other companies or things. What percentage of the fund that we're invested in do we know is associated with controversial weapons? That's my first question.
Yeah, so I can take that one. It's so within the kind of global market cap indexes, roughly 2,500 companies. Those that fall within the definition of controversial weapons is somewhere between 5 and 10. So it's less than 1% of that fund.
Right. Okay. Right. No, thank you for that. That's really useful. Now, reading the report, a bystander or somebody else would assume that we, the pension fund, have £10.5 million invested in controversial weapons. But of course we don't. We've invested that money in that fund, and as I've already said, that 1% of the fund is associated with possibly controversial weapons. So our exposure to the controversial weapons is very, very tiny, isn't it? Am I right in that? In the mathematics of it?
Yeah, yes.
Thank you. And then just changing the subject slightly, it was mentioned, I think it was Amanda, that one of the key factors of any investor is the influence you can have on the company or fund that you invest in. And Amanda quite rightly said we've got a small investment, therefore our influence is relatively small. However, if we disinvest, we have no influence whatsoever. And as many of us will know, in the past, many small investors with companies have got together to pressurize companies to change their views or actions or different things. So if we disinvest, we lose that. We've actually got a good opportunity, even though it's only £10.5 million, but we do have a good opportunity to influence that company and get them to disinvest in controversial weapons. Am I right in that?
I mean, I think as a general rule that if you're invested, there's an opportunity to engage in influence, and if you're not invested, you do lose that.
Okay, thank you. Well, so we have an influence. And then my final point is, it was mentioned, well, I guess we'll go into it later on, but looking at the numbers with disinvesting, reinvesting, and also the money that obviously our own pension team has spent, it would come to about £1 million. But it was mentioned that there would be extra costs if we went through, say, option 2. But if we chose no action, am I right in saying there'd be no extra costs?
Yeah. So
Okay.
option. If we had a 5th option, which was to do nothing, then it would just be the status quo, and we wouldn't have
no
any
extra
additional costs.
Thank you, and thank you, Chair.
Thank you, Councillor Flynn. I don't see any more questions at the moment. I think we've had quite a lot of questions. So I think now I'm going to have a wee break, and we're going to come back after 10 minutes. And likely there will be a motion at that point, and then we can have further debate, and then we'll decide the way forward that point. But it's important to have a wee break at this moment in time, and urge all the members of the board and the committee to contemplate any further questions, well, the debate afterwards. Thank you. I'll see you in 10 minutes. welcome back, everybody. So we're now going to go into, I'm going to move a motion that I've brought. And I'll go into the narrative just now. I wish to thank ISIO for presenting the report and Pinsent Masons on their scrutiny for this very comprehensive, concise report and details that sets out the options for the committee to decide on the matter of exclusion and disinvestment. They are specialists in the field and we are grateful for their level of competence. It is important when making decisions that we take a rational approach and consider all of our members of the Falkirk Pension Fund as we are here to represent them, and that is 39,000 members approximately and 13,500 pensioners who currently receive monthly payments. This means we must act in a fiduciary capacity, not bring in politics or personal interests or views, and that those include ethical views into our decision making. Whilst it is true, most people take the view that controversial and offensive weapons are abhorrent. These weapons are covered by international law prohibiting the use, and governments rely on political and economic enforcements on a grand scale. Responses to the offending countries that use these weapons should be swift and severe. For example, the United Nations might pass resolutions of public condemnation which harms a nation's global reputation or freezing the assets of that offending country. This will have the immense impact to stop the use. So with that, regarding the significant charges, one-off and ongoing charges for approving option 2 and the recommendations removing exclusion of the worst offenders, these amounts are large. And after costs that have been accumulated for the previous 2 reports, I believe this is not the right approach at this time, and it's not the best value from our members' contributions. All our members, active, retired and deferred, are challenged with the cost of living and the high cost of energy. Household income is restricted, and as a committee, it is their duty to protect them, to act in a prudent way. Ongoing costs on an annual basis from 55k to 371k plus one-off transaction costs. And looking to the future, we just can't take it in isolation. We need to look to the future when councils want to be smaller and leaner, and that includes the workforce. To me, that tells me there'll be less contributions being paid into the fund, so less room for growth. And could there be a risk of higher contributions in future? I also want to say, in an uncertain world, many changes are happening, even today, even as we speak. Even pension funds are thinking about changing their models and structures. Would governance change? And how would that tie in with some funds already elsewhere that wants to tie in with that are divested in different areas? So I believe we must have a clear, unwavering mandate with regard to fiduciary and how it impacts our members. So therefore, best to keep the status quo and agrees that no further action is taken as outlined in section 4.47 of the report. It's also very important for the Finance Director to monitor and to work with our collaborative partners to continue the development of the fund's approach to laggards, with any proposed changes to be included in the next iteration of the Statement of Responsible Principles. Because, you know, climate change is real. Just look at this week, all over the UK, record-breaking weather, and it'll break all records this week. So I urge you all, members of the committee, I urge you to please support this motion. Do we have a seconder? Right. Do you not want to speak at this point, Councillor Spears?
I will have something to say, so I'll reserve the right to come back in.
Okay.
Thank you.
Do we have any amendments on this? Councillor Hannah. And do we have two amendments, sorry?
I would like to propose an amendment which is straightforwardly that Pension Committee is asked to accept the recommendations contained in paragraph 2.1 of the report, recognising that all this is asking us to do is to divest from controversial weapons which are banned by international treaty.
Thank you, Councillor Hannah. Do you have a seconder?
Yep.
Councillor Sinclair.
Thanks, convener, and Councillor Hannah managed to get a light on just before I did. So, you know, fastest fingers first. Who wants to be a millionaire and all that jazz? No, I'm content to second Councillor Hannah's amendment, and I think I'll wait to hear some of the other contributions before I come back in. Thank you.
Thank you, Councillor.
Could I just clarify with Councillor Hannah and Councillor Sinclair that you're moving the recommendations that are set out in the report?
Yes.
Thank you.
I'm now going to open it up for other members online or in the room if they have any contributions regarding the motion and the amendment. Thank you. Mr. Whitty.
Thank you, convener. Yes, I mean, this clearly is probably one of the key issues that has been discussed since I've been on the board, and obviously just I'm commenting as a board member. I appreciate it's for the committee members to ultimately make the decision, but in my role as a board member to just raise some points for consideration. It is a grey area. I think the training that's been put for us has been really helpful, and I do want to just make a note of the appreciation of the effort and input and training that has been provided. I was broadly in agreement with the recommendations in the paper. I appreciate it's a balance of fiduciary duty and the ethics. I think some of the elements that were key to me was that it does keep that diversification largely intact. It still gives investment flexibility. And I was also heartened earlier by the answers that this isn't just a one-off and leaving it, but actually we're keeping looking at this jointly, some of it with Lothian. There's a new officer coming on board. You know, there is an element we do need to consider what future resource may be needed by the pension fund in this. I think the papers seem to be based on something that's objective, internationally industry recognised definitions, which I think is important for defence of any decision. And I think the only thing I'd bear in mind if we did nothing, which is one of the motions, and looking at paragraph 4.47, is we need to consider the reputational management of the pension fund, because if we're investing in controversial weapons that break treaties, even in a passive capacity, there's something there that maybe we need to consider as part of reputational risk as well. So I've just made those comments as a board member that hopefully are helpful to committee members in making their decision. Thank you, convener.
Thank you, Mr. Whitty. Do we have anybody else that wishes to speak? I don't see. Oh, Councillor Spears, thank you.
Thank you. I spoke earlier from Vincent Mason, and if I'm wrong, correct me, but you said it is not possible to accurately assess weapons companies. Now, ask the movers of their amendment, do we also not invest in companies that supply them? You know, where does this end? We cannot tell. And according to our part in the Geneva Convention and the United Nations, we don't purchase these weapons. We campaign against the use of these weapons. Nothing has been said today to say that they're actually getting manufactured at these places, because it is not possible to accurately assess the companies. It's a very, very small part of our portfolio, and it's gone on for evidence. This is the difficult situation, and especially a difficult situation for the state the country's in at the moment. We are a rudderless ship, as they say, after the decision of the Prime Minister this morning. He has a major NATO conference later this month. I don't know who will represent our country, but I know that, and I hope that our pension fund back our country. So until we know who supplies the supplier, we have a lot more detail. And if we're going to be monitoring this, that's going to be very expensive. And as our first priority is to our members, then that will be my priority. Thank you.
Thank you, Councillor Spears, for your contribution. Have Councillor Sinclair?
Convener, I think Councillor Flynn was
Oh, I
looking to
beg your
speak while I
pardon.
was. I'm happy to
Yes.
defer to him.
Sorry, Councillor Flynn, I beg your pardon.
No, it's all right. No problem whatsoever. No, just a couple of comments. I think we need to be aware. Obviously, Councillor Spears mentioned it's a small proportion of this fund. Well, I mentioned it earlier on. It was clarified, but we're talking about to disinvest and reinvest 838k as a potential top amount, which is 8% of the 10.5 million pound we've got invested. Add in the extra money that's already spent, as Amanda said, up to 140k. Now, this is money that potentially is taken out of the fund, and therefore is taken out of the pockets of the members, the 30-odd thousand members of the fund, you know. And I don't think that is a responsible action, in my opinion. Quite frankly, it isn't. The other thing is that what we're saying today, by saying no action, we're saying no action to the four choices that are in front of us. We are not saying no action on controversial weapons. Far from it. We all are against controversial weapons. You know, we've got to be in this world because we have, you know, a conscience and we have lives to protect, etc. So action on controversial weapons will continue through our lobbying of the funds, through other funds, other pension funds, etc. There is no way it's going to stop. So what we're not saying is no action on controversial weapons. We're only saying no action on these four choices by going back to the status quo. And Councillor Spears mentioned that, you know, where does it end? Companies are supplying these companies that provide the controversial weapons. So what do? Start disinvesting from them should we find out? The other factor, although it's maybe unlikely, although maybe not, the fund has less than 1%, not our fund, but the fund has less than 1% in controversial weapons. What have we agreed to disinvest today? And next week, the fund then, they themselves, due to pressure from other investors, decide to disinvest. So we're left spending almost £1 million and then we're no longer part of it and the fund is disinvested, because they must be subjected to lots of pressures all the way around. I mean, stock holders, etc., stakeholders, stockholders do have an impact. What happens if one of the other funds that we're in, the many funds that we're in, decides intentionally or inadvertently to invest in controversial weapons? Do we start disinvesting there? So it's quite a difficult and tricky situation, and certainly one that we need to be careful of, because, you know, £1 million is not an insignificant amount of money. And I do care about controversial weapons, of course I do. But we shouldn't be just saying, oh, well, let's just go with option 2 and spend all this money. And, you know, somebody's got to pay for it, and it's our pension holders that are paying for it, our members. So that's my viewpoint, Chair. Thank you for that. And thank you, Councillor Sinclair, for letting me.
Thank you, Councillor Flynn. Move over to Councillor Sinclair now. Thank you.
Thank you, Convener. I think it's already been said today, but I'm happy to echo the comments. There's been a significant amount of work gone into this over a number of years now to get us to the position that we're in today. And I think we are, as a committee, better informed as a result of that work. And that we are taking a decision today based on that work. So thank you to officers, Amanda and her team. Thank you to ISEO and everybody else who has been involved. It really is helpful for us to look at this and know that the decision we're making today is based on real information and real data that we can rely on and trust. There's the comments made and perhaps, you know, building on what Councillor Flynn has articulated just a moment ago. Yeah, we are all against controversial weapons. We do have an opportunity to do something with that here today in terms of the fund, because for me it's not about a political or a personal vendetta against whatever weapon. The fact remains that our fund and our members are exposed to controversial weapons that are industry defined, and that is a risk, however small. The fundamental principle of responsible investment should lead us into a future that protects our members from exposure to that type of risk. Now, we've gone through treaties, we've heard about Geneva, we've heard about Ottawa, we've heard about other treaties. Whatever treaty comes forward based on the United Nations conventions will inform what we do going forward. But I would much rather protect our members now and the fund now from any future risk that happens. We are agreed there is an exposure to controversial weapons, and that represents a financial risk, as well as Mr. Whitty articulated earlier on, a reputational risk to the fund. Now, when we talk about the fund as a whole, it might just be 0 point, and I'm going to focus on the exposure to controversial weapons because I think that that's the most important thing here, because it does represent the smallest amount of exposure to the fund. It does, however, represent in monetary terms 19.4% of our investment in the defence and aerospace sector. And what I would say is, in terms of the lobbying and engagement that has clearly gone on, not just in the last few years, but since the Geneva Convention and since the end of the Second World War, that has led us to today, where there is still an exposure to controversial weapons that manufacturers could be making that are banned. That's baseline unacceptable for me in this debate. We should be looking at this from the perspective of fiduciary duty, which has been mentioned a number of times, and the legal obligation for us to act in the best interests of the fund and our members. For me, that means protecting our members from any risk that breaches the basic fundamental principles of humanity, and that includes the risk that we are exposed to in relation to controversial weapons. So yeah, well, I agree that there's a significant amount of ethical argument in this. I think the data that's in front of us leads us to believe that that has been completely taken out of the situation, and it's the risk that our fund and our members are exposed to that's the most important thing here. This, for me, especially in relation to controversial weapons, relates and reflects directly on an unacceptable exposure to risk, and that's why I am in support of the officer's recommendations. Doing nothing in this occasion is absolutely unacceptable, and I think the committee needs to be mindful of that where that's concerned. So while it is for, to steal a phrase that Mr Davis used earlier on, it is for elected politicians to make a decision on these things on a global and international scale. It's for us here as a committee to decide what's absolutely best for our members. And I think the pragmatic approach that officers have put forward, based on the information that they've received and based on the work that they've done, is the right approach for the committee to take. And that's why I'm happy to second the amendment today. Thank you.
Thank you, Councillor Sinclair. Do we have anybody else that wants to contribute for the debate at this moment in time? I think today we've heard a lot of arguments regarding the options available. There's been a considerable amount of information there, and there has been a lot of good questions that has prompted some of the information that we have in the respect of why is it, why is that particular information we have received. So if nobody else wants to contribute to the debate, I think it's been good. A lot of questions have got asked. I think we'll go to the vote now, and Mr Peary will carry out this procedure.
Thank you, Convener. I just want to double check. Normally in the process when motion amendments are moved, there's a summing up by the move of the motion. So you're content that you've summed up? That was your...
I will sum up. I'll make it brief if that's the process. I don't think there's anybody in the room that disagrees that controversial weapons are bad, but it's the role of the pension funds with regard to them. We have lobbying companies. I mean, it's a small proportion. Any proportion is bad, and I think we all agree that they shouldn't be there. There is other avenues, bigger pathways to stop it in controversial weapons, but it's how it impacts our fund. And I'm always mindful of the members out there and what's actually happening in the future. What's going to happen in the future with pension funds? Nobody knows that, and nobody knows the risk if we were to take a different option either. But I believe at this moment, this is the best option we have, not to do anything, but to be mindful that the status quo is acceptable at the moment, and all the other avenues we've got to change policy with investment funds, we can continue to do that. Thank you.
Thank you. In that case, we'll proceed to the vote. So we have a motion from yourself, Councillor Binney, seconded by Councillor Spears, and we have an amendment from Councillor Hannah, seconded by Councillor Sinclair. It's maybe just worth at this point just pausing. Votes are quite rare in the Pensions Committee and Board. Some may say thankfully. And just for people observing online or who are in the room with us, the vote is restricted to those members of the Pensions Committee only. So I'll go through the list of Pensions Committee members' names and ask if they wish to vote for the motion or for the amendment. And for those in the room to put their light on when they cast their vote so that it's recorded. Okay? Is that clear? Mr. Davis is looking at me. Is that clear? Yeah. Or unclear?
Sorry, just to say, so you can ask us to vote for one or the other?
Yes. You can abstain if you wish. Okay. So going through the list, Councillor Binney.
Motion.
Councillor Aitchison.
Motion.
Councillor Flynn.
Motion.
Councillor Hannah.
Amendment.
Councillor Sinclair.
The amendment.
Councillor Spears. Councillor Quinn's not present today, I can tell. Mr. Grant,
Amendment.
and Mr. Davies.
Motion.
Yes. So there are 5 votes for the motion and there are 3 votes for the amendment. So the motion is carried. I wonder if it might be an opportunity to just take a 2-minute break.
Thank you. Thank you for that, Mr. Peary. And did everybody hear the numbers there? Okay, so at this point, we're actually going to take a wee 5-minute break again and compose ourselves and come back to the original agenda. Thank you. Well, welcome back, everybody. I just see the pictures coming on. I'll wait just a wee minute till I see more people appearing. I've obviously got the camera off, but and I just want to say thank you for your patience today. I've had a couple of breaks, but we're nearly at the end now. So I am going to start the meeting again, and I'm going to go to agenda item 6. That's unaudited annual report and accounts, and Debbie McRae will take this report. Thank you.
Thank you, Convener. The purpose of the report today is to ask the committee to consider the unaudited accounts of the pension fund. The accounts are subject to the local authority accounts regulations, and which is prescriptive in terms of timeframes for completion and consideration of the unaudited accounts. The requirements for the unaudited accounts are set out in paragraphs 3.3 and include the requirement to ensure they are considered by the appropriate committee by the 31st of August. The fund accounts will be submitted and published and advertised in accordance with the regulations, and this meeting fulfils the requirement for the consideration of the unaudited accounts by the 31st of August. A huge amount of work is required to produce the accounts, to pull together and check all the information in advance of the committee deadlines. And in particular, I'd like to thank Justina for all her hard work and coordination, along with Catherine and the wider pensions team for their input. Importantly, when reading the accounts, the committee and board should recognise the facts and some figures and information that that has already been presented to them at this meeting and in the past. The joint meetings for the fund receive regular information on fund performance, governance matters, risk and audit activity. So hopefully there's not much of a surprise of what's in the accounts for the committee and board. Much of the key information is pulled out in the covering report, which starts on page 22 of the agenda, and the key points section from paragraph 3.8 to 3.13 covers the key messages from the annual accounts. I'll highlight a few figures. The estimated funding level at the year end based on the Barnett-Waddingham methodology is 132%. Administration cost per member is £36.30. Investment return for the year was 11.08%, which was actually compared to 3.93 in 24-25. And that reflected performance against benchmark. Performance was just slightly 0.9% less than the benchmark. The closing net asset position, net assets had increased over the year by 376 million. I'll expand a little on these points, and I'll probably, bearing in mind, focus a wee bit of time mainly on the funding position, because we have talked about this before, but it's the one thing that probably as officers we found most difficult to try and weave through the annual accounts because of the difference between the Barnett-Waddingham and the Hymans approach. So the funding position is summarised at paragraph 3.9 of the covering report on page 24. The fund is estimated to have a funding position of 132% under the Barnett-Waddingham methodology, which would represent, if you were looking like for like, which it's not like for like, a decrease from 162% reported at 31st of March under the Hymans-Robertson methodology. However, if you try and estimate what the Hymans methodology would have been at 31st of March 2026, that would have showed an increase to about 165%, which is mainly due to higher than expected investment returns. In the training session prior to the March committee, Barnett-Waddingham presented their methodology and assumptions following their rerun of the 2023 valuation numbers to illustrate the likely impact of what the funding on the funding level would be. This showed an estimation of 112% compared to the Hymans calculation of 137%. As expected, the estimates at 31st of March also show a significant variance between the Hymans approach of 165% and the Barnett-Waddingham approach of 132%. However, of note is that Barnett-Waddingham approach gave an estimate of 112% at 2023, but that has improved to 132%. I'll not go into the differences in the way that the two actuaries look at it, because that's been covered previously, but just to note that because the Barnett-Waddingham approach smooths the value of the assets over the 6-month period, the assets at note 3.9 or noted in 3.9 of the covering report do not exactly tie to the figures in the accounts. So overall, despite the different funding levels, the approaches rather, the fund remains in a healthy position, and the usual cautions apply as the funding level is at a point in time. The fund actuary statement is in Appendix 1, which is at page 204 of today's agenda. There's a lot of information regarding the investments in the accounts, and some of that will be covered by the investment review paper later on, which looks at the performance of the fund to 31st of March 2026. The Joint Investment Forum, which includes independent advisors, are generally happy with fund performance, and no significant concerns have been raised. I will move on because we do cover a lot of the investment activity elsewhere, to just paragraphs 3.14 to 3.16 references the annual governance statement, which is on page 188 of the agenda, and the governance compliance statement, which is unique to pension funds and assesses the fund's compliance with best practice principles as set out by the SPPA best practice guidelines, is at page 196 of the agenda. Again, these statements should reflect committee and board's understanding of how the fund is operating, as this was presented at the March 26 committee meeting. Other important sections which should reflect committee and board understanding are the management commentary and the which help give a better understanding the accounts and pension fund operations, and the statement of responsibilities, which states the responsibilities of the administering authority and the chief finance officer. And following feedback, a glossary has been concluded from last year. A glossary has been included in Appendix 4, and the fund will look to expand that glossary in future years. Information on the administration activity begins on page 76 of the agenda, includes performance stats starting at page 84, and this section of the report highlights the large volume of work undertaken by a relatively small team. And that leaves finally the two key financial statements on pages 144 and 145 of the agenda, which is the pension fund account and the net assets statement, respectively. These statements shows the closing assets as at 31st of March 2026 was 3.933 billion, an increase of 376 million. The pension fund account shows all the inflows, contributions and transfers from other pension funds, and outflows resulting from dealing with members, and explanations for changes in these flows are included at page 26. And that section also highlights the negative cash flow position of the fund, which we have talked about previously due to the maturing position of the fund. The pension fund account also shows costs that the fund incurred from administration and investment activities and the net asset returns. The net increase and decrease line shows the movement in the year, either increasing and decreasing the net assets. The pension fund net asset statement shows the assets and liabilities arising from both investment and administration activities and the closing position at the year end. So the fund statement takes into account only liabilities for the period of the financial statement, so it doesn't mean that the fund has all the money now that will be needed to fund future benefits. However, the present value of future obligations is included in the notes to accounts, note 19, and this shows an estimated overall net asset. So if we get the investment returns we anticipate, then on balance we should have enough funds. So after that whirlwind, coming to the recommendations, committee and board are asked to consider and comment on the unaudited report and accounts, and committee is asked to approve the fund annual governance statement. Thank you, and I and Justina are happy to answer any questions.
I'll open it up for questions. Sorry, Mr. Davis.
Thank you, Kavina. Can you just clarify for me on page 43 of the report and accounts, investment return for those 4 years, are they net or gross figures?
Computer's taking me a wee minute to get there. Looking in the wrong set of accounts. Sorry, Justina, are you okay? Thank you, sorry. 40. What's up the wrong?
All the returns will be a gross returns. Gross.
The gross. So just to follow up on that. So are there any bonus calculations based on gross returns that relative to the benchmark? Because obviously I'd imagine then after cost, the net return is probably going to be slightly below the benchmark. Does that impact bonus payments at all?
As we have explained before, we do not do the net calculations due to the issues with gathering of the data. So we do not have this type of information. However, to establish our costs, we do other exercises and collect the data on the cost. But this is a time-consuming exercise, and very often the data is not easily available. Hence, what is reported, it is gross, and it doesn't take into consideration any adjustments to make a net return.
But you have a net return at the end of the year, don't you? You have a net asset value at the end of the year.
Okay, but that a net asset return is calculated a little bit differently. The net assets that we have reported in the accounts are per SIPFA guidance. So it takes into consideration not only the assets that we hold, but also the all the operational, everything's what we all the contributions and expenses. So this, if I could explain, the net, those net assets are different than the net assets for calculating the performance.
Sure. Okay, I appreciate that. Could I ask then that you just put a note on line 3 that investment return is gross of costs? And I would also ask obviously we know the investment markets are volatile, and a short period like a year doesn't necessarily capture that. Could we add an extra column at the end for those 4 years to give the cumulative returns over the 4 years?
Yes, I think we can do this. I'm sure that further in the accounts, we've got a chart showing the cumulative returns. I'm really sorry, I cannot remember exactly what page it is, but we could, yes.
Yeah, okay.
However, we do have either data that is in a 3-year period or 5-year period. At the 4-year period, we do not receive that type of data.
Okay. So I have one other point, if possible. I think from my notes on page 58, I think my name is still incorrectly spelt. It's got an E in it, which we seem to get right for the notes, but that could be.
Get that? Yeah.
Brilliant. Thank you.
We have somebody who wants to answer a question. Mr. Whitty.
Hi, thank you. Yeah, it's I suppose just a couple of points. I understand the need for covering both Hymans and the new auditors going forward, and I appreciate why it needs to be in the narrative this year because of the percentages, but I'm just wondering, going forward, I'm assuming we won't keep referring back to Hymans and estimated valuations in future years. It does feel like a bit backward looking if we're having to constantly keep referring to this is what it would have been under Hymans. I mean, moving providers is just something that needs to happen. So that's one point. Secondly, on the financial performance overview, obviously the variance between budget and actuals for 25-26, I'm looking at page 38 and 39 of the unaudited report. There's nearly, well, just over 1.4 million variance in less spend in the actuals than budget, but the budget for 26-27 is higher. So I'm just checking that those variances are one-off savings then that's driven that, as opposed to recurrent savings that would impact the budget going forward. So there's that table there. And my third point, and I'm not trying to be trite with this, but the picture on the front of the unaudited accounts struck me as a bit strange, to be honest. It's of the Forestry Commission. So I wasn't, again, it wasn't, this is, maybe it's, I'm making a serious point. Most people will look at the cover and what does that say about Falkirk Council and Pension Scheme when it's actually a picture of the Forestry Commission and it's called Black Loch. Just a comment there. Thanks.
Thank you, Mr. Whitty. I'll cover that one first. With the covers, we try and we get photographs from the marketing department. I think it's the marketing department from folk at council to try and look at various covers that we kind of rotate around different areas that the pension fund has. So we always try and make sure there's a cover from an area in Falkirk, Stirling, or Clack. So that's the kind of rationale for that. Cover. So just a different one from the Kelpies that we've had and the Falkirk Wheel that we've had before. So we're trying to look for something different. On the actuary, I'll go back to that one. The actuary part, yes, I absolutely agree. I think this year we really had to feel we had to explain the two differences, because the Hyman's valuation is the one that still stands right now. But by the time we come to next year's accounts, we'll have had the new valuation under the Barnett-Waddingham approach, and therefore, as you say, all references to the old actuary will disappear. But because that is the valuation that stands right now and will continue to stand until the 31st of March 27, we felt that we needed to explain that and the different approach towards it. With regard to the costs, oh, my phone is telling me it doesn't understand me. Regard to the costs, so you were talking about the variances. Some of these depend on whether we've had delayed recruitment, for example, on the employee expenses front, and then also due to changes. Oh, it was the 1.4. Yeah, the manager's fees. We always have to have a guess, and it depends what we're looking at. Was an underspend following a divestment from Baillie Gifford and the move to the Royal London mandate. So it is an estimate of what we can do, and then obviously we then look at the next year, and we're looking to maybe move some to a different mandate. So therefore, there's increased investment costs on that front. Obviously, the staff costs then have the pay awards, etc., in as well. So yes, that money is just things that didn't happen that we might have expected, and then this year we're taking a fresh look at what we're expecting for the year coming up.
Did that answer your question, Mr. Whitty?
Yes, no, it does. That's helpful just to understand that on the costings and also on Hyman's. Yeah, I appreciate why it needs to be in on this year's account. I've still got a question mark on the picture, but there we go. Thank you.
Thank you for that. If I've no more questions, I'm just going to repeat what we said. We do have a question. It's Mr. Davis. Thank you.
Just one observation on page 117 in terms of climate change. It says identified as a major risk to the planet. I mean, the planet's been around for 4.5 billion years. It's been hot or cold in the past. I think there'd be a better phrase to say maybe a risk to human life as you know it, or life forms. But I think saying the planet is being a bit ambitious to the risk.
Thank you, Mr. Davis. We'll take that on board. Thank you. I'm just going to quickly move on to, Councillor Spears, beg your pardon.
Okay, thank you. With the present consultations with Clackmannan Council, do you envisage a trimmed down workforce, which will either mean we have to people retiring early, and how will that obviously affect the pension fund?
Sorry, when you're saying consultation with Clackmannanshire, do you mean...
There's consultation going on about amalgamating joint work and trimmed down councils.
The transformation through collaboration work. So that's with Clackmannanshire and Stirling councils. I think at this point it's too early to say. We don't have the business cases to be brought forward for members to consider that would look at whether or not there's a reduction in staffing in any particular area. I think There are risks, and obviously we've heard a lot from, in Scottish Government terms about public sector reform, reduction of the public sector workforce and things like that. So these are certainly things that we will have to consider and look at the impact moving forward. But at this point, I'm not aware of anything specific that I would say would have an impact on the fund as it is.
Thank you.
Thank you, Councillor Spears. No more questions, so I'm just quickly repeat the recommendations. The Pensions Committee and Pension Board is asked to consider and comment on the unaudited annual report and accounts 25-26 Falkirk Council Pension Fund. The Pensions Committee is asked to approve the fund annual governance statement. Sorry, Mr. Peary would like to speak. Thank you.
Thank you. Just to say, obviously, that the first action is that the committee and board are asked to consider and comment on the annual report and accounts, and they have. But it might also be prudent to note that the comments made by Mr. Davies are going to be taken on board. So it'd be to note the comments made by the committee and to approve the the annual governance statement.
Thank you. Yes, I agree to that. That's important. We're going to move on now to agenda item 7, which is the Internal Audit Annual Assurance Report, and that will be taken by Sarah McPhee.
Thank you. This report is the 25-26 Internal Audit Annual Assurance Report. The purpose of this report is to summarise the work Internal Audit have undertaken over the course of last year and to provide an overall opinion on the Council's arrangements for risk management, governance and control based on that work. The report also comments on our compliance with global internal audit standards. As you can see from section 2, I asked the Pension Committee to note that sufficient internal audit work was undertaken to support a balanced assurance, and that internal audit can provide substantial assurance on the fund's arrangements for risk management, governance and control for the year to 31st of March 2026. Section 4 of the report explains the reviews undertaken as part of the 25-26 Internal Audit Plan, which was approved by a Pension Committee. Paragraph 4.5 to 4.10 provide details on the transactional testing. It is noted that a sample of 35 was taken with no discrepancies noted. Interest had been added to 4 lump sum pension payments due to not being paid within 1 month. The delays were not caused by the pension section and were due to late receipt of final pay information. Our testing did identify an issue with pension officer initials and signatures being illegible. It was also noted that there is no written procedures governing the transactions. Paragraphs 4.11 to 4.18 provides details of the other review in the audit plan. As stated at paragraph 4.3, the audit plan was amended during the year. The original plan was to review provision of data to the Pension Dashboard Programme. Unfortunately, the DWP did not make the dashboard available to members of the public as anticipated. After discussions with the pension manager and the Chief Finance Officer, it was agreed that we would be undertaking an operational cash management arrangements instead. The review of both the audit areas previously mentioned represents our 25-26 programme of works. Internal audit can provide substantial assurance in respect to the fund's arrangements for risk management, governance and control for the year to 31st of March 2026. I'm happy to try and answer any questions that you might have.
Thank you. I'm going to open it up. Has anybody got any questions on the internal audit plan? No, I don't see any hands up. So, sorry. Councillor Sinclair. So it's internal audit annual assurance report. I beg your pardon.
Thank you, Convener. It's just a quick question. I suppose it might be handy for those who may be watching and for us in the committee to understand the levels of assurance that are available for internal audit and what substantial means within those terms. Thank you.
Yeah, that's no problem. Apologies, I honestly thought that was in as Appendix 1 to this report, but we've clearly missed that off. It is as Appendix 1, I believe, for the next report that we were presenting, but we do have 3 levels of assurance. We have a substantial assurance, a limited assurance, and no assurance. Just let me check the next report to see if it is in there before I read it out to you. Yep, it is in the audit plan where it's detailed down in Appendix 1, but if you wish, I can read out what the level of assurance is.
Yeah, no, I think my question was more to ensure that though, I mean, I've read the paper, I can see that it's there. It's just for those who have an interest in the committee who are not here today or who may be watching at a future point and who don't either haven't accessed the papers or don't know how to access the papers, just to give people the reassurance of what substantial assurance means in relation to an internal audit assessment. Thank you.
Yep, sorry, no problem there. The substantial assurance is our highest level of assurance, and we've got largely satisfactory system of risk in place. So therefore, we've got nothing that we are overly concerned about. There is always going to be risk, no matter what we do, but this, with a substantial assurance, we are not overly concerned about what we're seeing. There is mitigating procedures in place to cover it.
Thank you, Councillor Sinclair. And I do remember in the past we did have definitions of the level of insurance like in the papers. So maybe that's something for the future if those can continue. Oh, we do actually in Appendix 1. Thank you. So any more questions? No. So I'm going to move to the recommendations. It's recommended that committee and the board notes sufficient internal audit work was undertaken to support a balanced assurance. Internal audit can provide substantial insurance in respect of the fund's arrangements for risk management, governance and control for the year to 31st of March 26, and the internal audit section operated in compliance with the global internal audit standards in the UK public sector, with no real or apparent impairment or restriction to scope, independence, objectivity of internal audit activity during the year. Does the committee and board note this?
Yep, agreed.
Thank you. So we're now moving on to item 8, internal audit plan. And that will be Sarah McPhee again for that. Thank you, Sarah.
Thank you. This paper sets out a proposed programme of works for 26-27. After discussion with the pension manager, there are two main areas for review. Firstly, at paragraph 4.7, we'll be undertaking transactional testing on the fund. This will be achieved by sample checking pensions rights have been transferred in and out of the fund correctly, retiring fund members have received the correct pension payment, and lump sum payments have been correctly paid. At paragraph 4.8, we'll undertake a review to ensure that internal controls that the fund custodian, who is Northern Trust, recommends are operating effectively. This will be scoped further nearer the time of undertaking the audit. Paragraph 4.9 to 4.11 provide background to the audit process, including the preparation of an annual assurance statement. To finish, I draw your attention to the recommendation at paragraph 2.1. In particular, can I ask the committee approves the internal audit plan for the year, but to bear in mind the need to be flexible and the internal audit will direct resources to where they're most needed and notes the provision of an annual assurance report. Thank you, and I'm happy to answer any questions you might have.
Thank you, Sarah. I'll open it up for any questions. No, I don't see any questions in the room or online. So I'm just going to move to the recommendation. It's recommended that committee and board notes the resources available to internal audit and that the plan is flexible, and notes that the annual insurance report for 25-26 will be provided at this meeting. The Pensions Committee is asked to approve the Falkirk Council Pension Fund Internal Audit Plan for 26-27. Do we agree?
Agreed.
Thank you. So moving on quite swiftly to agenda item 9, which is the Pension Fund Business Plan. And that's Debbie and Catherine. I'll take this report.
Thank you, Convener. I'll start off on covering the investment accounting side of the business plan, and then Catherine will hopefully fill in everything that I've not covered and the stuff from her side. As noted at the last few meetings, various procurements have been ongoing. All have been joint procurements with our collaborative partners, Lothian and Fife Pension funds, which reduce cost and resource spent on these exercises for all the funds. I'm pleased to report that the custody contract with Northern Trust is now signed. As noted at the last meeting, the voting and engagement tender also concluded, and initially the results meant that we would be changing provider. However, during clarification, one submission was assessed as non-compliant with the tender specification and was therefore declined. As a result of this, our current provider, Hermes EOS, became the winning bid. The contract documentation is currently being finalised with intention for these to be signed by the end of June. A further joint procurement was completed in the quarter, and Hymans Robertson have been appointed as the specialist investment consultant to undertake the analysis regarding to the strategic asset allocation, which is required as part of the triennial valuation process. As noted at the last meeting, we will also be looking to procure specialist legal services for investment and benefits, but this has not progressed as a result of the volume of work the section has had to deal with over the last few months. On the training front, I hope that those of you who attended the joint training from the voting and engagement provider and from one of our independent GIF advisors, Stephen Jones, in May found it insightful, and as highlighted in the paper, the Scottish LGPS funds plan to carry out general board and committee training on the 24th of November, so a date for everybody's diaries if it's not in there already. Like Catherine, the accounts and Catherine will come over to the accounts and investment team are carrying some vacancies, and we have interviews for one post this week and plan to carry out recruitment for another in autumn. Following on from an event in early March 25, the Scottish LGPS funds came together in March 26 to continue to discuss and explore voluntary collaboration opportunities. A vision statement and draft framework for memorandum of understanding was circulated to the funds after the event, with the intention that the document would be taken back to committees and boards at a suitable date to seek endorsement and any feedback. The aim is to have a finalised endorsed vision by the end of September. Due to the volume of business for this June committee, officers are not presenting the vision at this meeting, but plan to use the August meeting, which has always been scheduled in case the report and accounts run late. So we're hoping to use that, or we plan to use that August meeting to present the vision for to the committee and board for review. The quarterly GIF report will also be presented to that August meeting, as the timing of the June GIF meant it was too tight with other reports still being drafted to be able to present now. With that said, I will hand over to Catherine to cover her side.
I will be extremely brief for me, which will be a surprise. So the first thing to note is I have updated the training log to show training undertaken to the end of May. This includes any modules you may have completed in Enlighten, so if you think there's anything wrong, let me know. Moving on to the key projects that the fund is currently working on, progress on the MacLeod project remains slow. So when I tried to quantify the remainder outstanding for this meeting, I did actually surprise myself, as we're about 75% of the way through the manual amendments. So still hopeful that we will complete in time for the annual benefit statements, but I will be bringing an update at the August meeting of the committee and board with regard to the progress made and whether it will be necessary to make a report to the regulator. With regard to the pensions dashboard, the general understanding is that the dashboard will be made available to the public in the 27-28 financial year. We are expecting an update on launch plans around about October, end of October this year. And in preparation of this, we are working with our partner funds to establish best practice to ensure we deliver our statutory service levels and that they can be maintained. You might have noticed there was a restatement of the National Fraud Initiative overpayments. Came to my attention, we'd actually included the Teachers' Compensation Scheme overpayments. So we've stripped those out, and the total overpayments for the pension fund was £1,900, of which £265 has been recovered. We will continue to attempt to recover the remaining of the overpayments due to the fund. Moving on to the general governance matters, we have the change to the escape discount rate. In my report, I said we were having to stockpile. We no longer do. We got the factors in at the beginning of last week, so we're ahead of schedule on that. In the meantime, any other calculations are being done on the factors in force at the time. We had a penalty notice for £900, which is an ongoing conversation with HMRC because it's for a pension scheme tax reference number that is no longer active. We haven't made a return on it for over 11 years, over a decade, and we think the reason it's come live again is HMRC have migrated from one platform to another, so we're just getting that back into position where they close that off because we can't actually physically make a return, so how we could get a penalty, we don't know. And then the final thing I'm going to cover off is the fact that we will be joining the National Knowledge Assessment for committee and board as of this year. It's not going to be anything to be worried about. It's very similar to what we actually do within the fund, but what it does enable us is to take part in benchmarking. So it will be a step improvement on the requirement to disclose on the training that's undertaken by committee and board and the effectiveness of that training. So any questions, happy to take them.
Thank you, Catherine. I'm going to open it up for members of the board and committee. Do you have any questions on this agenda item? I don't see any hands up, though I've just got a wee quick question. I see you not fully complemented actually in your team, the pension fund. What is the impact of this at the moment? I know there might be a lot of detail behind it, but just a wee general input about why, what if we're not fully complemented, I take it all the work's perhaps not getting done, or you're having to prioritise differently?
Yeah, we are having to prioritise differently. So we also have people working longer than they should. It is a problem. But the essence is, yes, we are prioritising differently. So, for example, we would have hoped to have had the McLeod project work completed by now. We're not. The valuation has me concerned because that is going to fall to two people to do that, but then that's competing with the McLeod remedy work, which is falling to the same two people. So it's difficult. No same two people will be doing the annual benefit statements as at the 31st of August. So you can see there's a reason for, there is a problem, but we are managing it as best we can.
Appreciate that, Catherine. Thank you. No more questions. I'm just going to move to the recommendations. Note the work undertaken and developments since the last report to the committee and board. Note the proposed actions to complete the work as set out in the fund's business plan, and likely that will be taking on new staff in the future, perhaps. I'm now moving to agenda item 10, investment review, and this will be taken by Albert. Albert, do we have Albert online? Yes. Oh, we do. Thank you, Albert. And thank you for your patience.
Thank you, convener. Good afternoon, everyone. So just to go through three areas in this report, I'll talk briefly about the market activity over Q1 2026, then touch briefly in terms of the fund's allocations by policy group and any recent activity, and then I'll finish by talking about the fund returns over the quarter and the longer term. In terms of markets for Q1 2026, global equity markets fell during the quarter, reversing some of the gains from earlier in the year. The year started positively. Equity markets were up 4 to 5% in sterling terms, but then sold off quite sharply as conflict escalated in the Middle East, with equity markets ending the quarter down by 1.3%. Losses were concentrated in the US, where the S&P 500 declined by 4.4%. Fixed income markets also faced headwinds. Rising oil prices and renewed inflation concerns led investors to reassess the outlook for interest rates, with expectations for rate cuts pushed back. Moving on then to the fund's allocations, at paragraph 3.2.4, we have the table that shows the policy group allocations on a quarterly basis over the past 12 months. Looking at the middle of the table, the position of the fund as at end March 2026 showed a slight underweight to equities, underweights to real assets and credit, with overweights to sovereign bonds and to cash. The main activity over the quarter was a reduction to equities and an increase to sovereign bonds, comprising a new short-dated gilts mandate with LGIM and an increase to the LPFI index-linked gilts mandate. Moving on then to fund returns for the quarter. The fund returned plus 1.9% over the quarter, ahead of the benchmark return of minus 0.9%. Equities were the main driver of relative outperformance, with the fund's lower risk mandates contributing to the fund's equities returning plus 3.2% against the equity benchmark return of minus 1.2%. However, we should note that the fund benchmark is aligned to a long-term, not quarterly objective, and in addition, the fund's private market assets are not valued as frequently. So longer-term data is probably preferable for assessment purposes. We note at 3.3.5, long-term return data shows the fund has appreciated 7.6% per annum since September 2001 against the benchmark return of 6.6%. More recently, over the 5-year period, the fund has risen 7.4% per annum compared with a benchmark gain of 3.3% per annum. The subsequent paragraphs provide detail around the risk measures for the fund. So on a 5-year basis, the fund has delivered risk of 6.5% against the benchmark's risk measure of 10.3%. And this shows that the fund has delivered higher returns against the benchmark with a significantly lower level of risk. That was all I was going to say in relation to the review. Happy to take any questions or comments.
Thank you, Albert. Appreciate that. Appreciate your investment review once again. I'm going to open it up, and I have Mr. Davis again.
Hi, Albert. I think it's a bit misleading to quote the investment returns when they're gross. Could you not put a note in to say that these are gross returns and not net? Is that possible?
Thank you. Yeah, thank you, Councillor Davis. We do note that paragraph 3.3.12. So it is noted in the report. I'm happy to note it just here. They are gross of fees. There's more detail there around the additional exercise that Justina mentioned earlier in terms of CEM benchmarking.
Yeah, but I think in the commentary it would help if you made the commentary that these are gross returns. What it means is that after fees, your outperformance against the benchmark is much more modest, and actually you're getting close to benchmark returns. In which case the question becomes, well, why not just buy the benchmark? I mean, you know where I'm going here. That obviously that we're paying you for alpha. And after fees, you're not delivering very much. And also, following on from that, is your risk return measures. The Sharpe ratio measures the equity returns against a different asset class against cash, where that's actually a much more relevant measure is the information ratio, which is the same, which is the outperformance against the same asset class against equities. So that would help readers to get much more informed view of the value that you've added. Can we do that?
Yeah, so there are a couple of points there. So the first one is to say, absolutely, we can certainly add gross as a note in terms of the returns. I suppose your second point around, just to be clear, you're not paying me directly. So you are paying investment managers collectively in terms of the different strategies that they're providing. I suppose my comment would be around, in terms of the risk you're taking versus the approach that Falkirk is taking and Lothian also, relative to not being invested passively, is that you are invested in something slightly different relative to the index. And so I suppose the strategy that has been consciously adopted so far, and you obviously have you can change that, is to adopt a lower risk strategy, so that in situations when the market sells off, that the fund has a slightly better level of protection in terms of a sell-off. So, for example, we have seen that in the quarter that's just passed, in that when equities sold off by almost 2%, the fund's equities actually returned 3%. So that is a very, very short period of time, and we shouldn't extrapolate that, but it's just an example of the difference that you can get by investing slightly differently to the index. In terms of the measure that we use, we think that the measure of risk, in terms of the volatility of the fund's returns, is the most appropriate one. There are certainly plenty of other measures that people can look at. We just use that because that is probably the most straightforward and indicative metric that shows how volatile the benchmark is relative to how volatile the fund is, and we think that is appropriate.
Thank you, Mr. Chen. Thank you, Mr. Davis. Councillor Flynn, thank you.
Yeah, thank you, convener. Just two straightforward questions. With regard to equities, Albert, do we always just take dividends, or do we ever invest in accumulation units, reinvest in the same shares?
Sure. So that approach will be different across different mandates.
Mm-hmm.
So within your equities structure, so within a number of your equity mandates, the dividends are reinvested, so they're not swept out.
Right.
But in the mandates that LPFI, which is the Lothian related investment manager entity, dividends are stripped from those mandates because that is consistent with what Lothian does. So the cash comes out and is swept to cash for those particular mandates. But you have the option. You have the option as a fund, and from an implementation perspective, to choose how you want to do that. So the option is there to either turn it on or turn it off, depending on how you would like that invested.
Okay, that's useful to know. And my second question, straightforward: do we participate in IPOs, or are we allowed as a pension fund to participate? I'm thinking about SpaceX the week before last, or whatever,
Yeah. So that is effectively that is effectively within the permissions of each of your managers. So each of your investment managers has the authority to participate if they wish to, and if they have access to that those particular IPOs, if that's aligned with their mandate. So, for example, a passive index benchmark fund will, by virtue of when that stock comes into the index, they will be effectively required to invest in that stock. Okay, but individual discretionary managers will have the authority to choose whether they want to participate or not. So yes, would be the short answer.
Yeah, because all IPOs don't necessarily go up, but there's sometimes an opportunity to make some considerable gains. No, thank you for that, and thank you, convener. Thank you.
Thank you. I would like to speak.
Yeah, I just thought I would raise at this point that committee and board will notice that we don't have a paper from the Joint Investment Forum, which you normally receive at each meeting. Quite often it echoes the information that Albert provides in the investment review paper. Just to flag, that was just a timing issue, so that the investment forum was held on the Wednesday, the 5th of June, and these papers went out on the Friday, and we just didn't have enough time to turn that paper around. So anything of note, we will pick up in terms of the next update to committee, but just in case anyone was wondering why that paper wasn't there. Thanks.
Thank you, Amanda. No more questions, so I'm just going to move to the recommendations. Committee and board are asked to note for the period ending 31st of March 2026, one, recent investment market developments, the fund's strategic allocation and current positioning, the fund's performance. Do we agree?
Agreed.
Right, thank you. We're now going to move on. I'm sure everybody will be quite relieved to agenda item 11, and it's an engagement and voting activity, and Debbie will take that. Thank you.
Thank you, Convener. I'll go as quickly as I can. I've not got very much to say. So this paper is the standard quarterly report that looks at the voting and engagement activity provided by Hermes EOS for Q1 of 2026. As noted in the list of background papers, a highlights report is updated to the SharePoint portal, and the highlights report should be considered confidential. Please remember to look at these papers as they provide background as to what Hermes EOS is doing on our behalf, and obviously we've been discussing through the earlier paper what they do on our behalf. So if it's of interest, please go and have a look. Section 3.5 to 3.11 of the paper sets out the Hermes approach, which hasn't changed from previous quarters. And section 3.12 highlights that Hermes engaged with 45 companies on 222 issues and objectives relevant to our fund. Again, detailed on these engagements are included in the highlights report. And in addition, in paragraphs 3.13 to 3.15, note the engagement reports from the Local Authority Pension Fund Forum, LAPF, and the ESG reports from Schroders and Legal & General are also in the SharePoint portal. The outline voting position is set out in section 3.16 to 3.18, and the report also details the aftermath of some co-filings, which I've also mentioned today, that we undertook in the last quarter for Shell and BP, highlighting the fund and other bodies can put pressure on companies to change and take on board shareholder views, which is only possible if we're shareholders and have a vote. So there's no significant issues to draw to the committee and board attention, but I'm happy to take any questions.
I'll open it up for questions. I don't see any questions for this last agenda item. So that is the last item on the agenda today. So I'll close business. But I want to say thank you to all our members online and in the room today. Thank you so much for your participation and engagement. I think we had really good questions and a really good debate over some of the agenda items. And I also want to thank, every time I want to thank the pension fund officers for all their detailed reports that comes to members. It's very professional work, takes a lot of time and a lot of resource. Also want to thank our support officers here sitting beside me. I have a wee hearing impediment, so they are very good and they help me quite a lot to be able to navigate this committee. So I'll say goodbye to everybody and I'll see you all again on I've got the date here somewhere, in August, is it 26th?
25th.
23rd of August. So that's when we'll meet again. Anyway, have a good week this week. There's been a lot of change happening in the world today. Okay, thank you everybody. Bye-bye.